Hello everyone, welcome to Wall Street Mojo. To know more about this video nominal account, watch the video till the end, and also if you're new to this channel, then you can subscribe us by clicking the bell icon that's given below. Welcome everyone, and today we are going to talk about an accounting topic, that is a bookkeeping basics that we are going to learn. Now what this topic is all about, let's get into the nitty-gritty. Before running on the topic, I'll give you a brief diagram what we are going to do. First we are going to understand what exactly nominal account is with the help of an example. And then we are going to understand the rules, how the transferring of the funds from nominal account to real account takes place, and then the difference between the nominal and the real account post facto, that particular way. So this is going to be the whole structure of this particular session. So let's begin. Now, talking regarding the nominal account, what exactly the nominal account is. First, nominal account are the accounts related to the associated to the losses and expenses, or probably income or gains. The examples include purchase account, sales account, salary account, commission account. So the final outcome of the nominal account is either profit or loss, when is then the ultimately transferred to the so-called capital account. Now, the nominal account is the income account statement, that is expenses, income, loss, profit, and is also known as what we call as the temporary account. Unlike the balance sheet account, like asset, liability, owner's equity, which are permanent accounts. So nominal account starts with a zero balance. It starts with a zero balance at the start of every accounting year, and then during the period it accumulates all the gains and losses and returns to the zero balance at the end of every accounting year by transferring and paying the amount balanced to the permanent account. Let's begin. First, the nominal account example. Well, let's consider a temporary account like sales account, which is open for recording the sales of goods or services during the year. And at the end of the financial year, the total sales, let's say, are transferred to the revenue account, of which which again at the end of the year are transferred to the revenue statement account. And at the end, positive and negative changes, like what is we called as revenue minus expenses, are transferred to the permanent account balance in the balance sheet. So based on the periodicity of the flow of the funds, the account is divided into following. An income, is a short-term outflow of the fund during the fiscal year. Second, an expense are the short-term outflow of the funds during the fiscal year. Third, an asset is a long-term inflow, of funds whose time horizon can be spread to multiple years. So as the assets value can be calculated as the present value of future cash flow. Now, fourth, a liability is the long-term outflow, of a fund which is extending beyond the financial year. Let's understand some of the rules of the nominal account. The golden rule to record any transaction in a nominal account are debit all the expenses and losses. Second, credit all the income and gains. So let us understand the rules of the nominal account with the help of an example. Suppose, let's say, a good is purchased for 15,000 in cash transaction. To record this transaction at the book, we are affecting two accounts, purchase account and cash account. So the account that is involved is the purchase account, which is debit. Rule here applied is nominal account, debit all the expenses, and here credit will be to cash account, that will be your credit, and the rule will go as, which is a real account, credit what goes out. So the amount will be over here as 15,000. So transferring funds from nominal to real account, how does that work? See, the following journal entries will come into picture. Okay. It will show the balances in the nominal account are shifted through an income summary account to the retained earning account. So first, there will be shift of all the rupees around 10,000 of revenues that is generated during the month to the income summary account. Revenue, debit and credit. So the revenue is 10,000 to the income summary, which is 10,000. Second, let's say you shift all the 9,000 of the expense, okay, during the month to the income summary account. Let's say you do this. Then what? There is assumed to be just one expense. It is just assumed as the one expense account. Okay. Third, shift of rupees, let's say 1,000 net profit balance in the income summary account to retained account. So how that will happen? So income summary is 1,000 to retained earnings. The retained earnings will be 1,000. Okay, so the preceding entries can be completed manually. However, in accounting software packages, okay, will handle the transfer tasks automatically once an authorized user sets the rollover flag in the software to close the old reporting year and shift the record keeping to the new fiscal year. So what is the difference? What is the difference between a nominal account and a real account? When we differentiate between these two accounts, the main parameter we consider is the balance in these accounts at the end of the fiscal year. See, as we know that these accounts starts with the what we call as zero balance and ends up with a zero balance. So only these account is called the temporary account, whereas the balance in the real account does not reset to zero. So at the end of the fiscal year, and last year balance gets carried forward to the next fiscal year. Now, these are the income statement accounts, that is the account for recording the income and expenses, okay, the profits and losses, whereas the real account is linked with the what we call as, these income statements accounts are recorded income expenses and they are recorded in terms of assets, liabilities and owner equity, and at the end of the fiscal year the balance in the nominal temporary account are transferred to the real account for the net change during the accounting year. So in other terms, the nominal account rule is reset to zero and the balance is carried forward to the real account. An entry in the nominal account are recorded as per the journal entry with respect to time and date. So I hope based on this you have learned from this particular video. If you have learned and enjoyed watching the videos, please like, comment on this video and subscribe to our channel for all the latest updates. Thank you everyone for watching this video.